We're looking at deep cuts at the end of the week for the Indian equity markets. You have the benchmark indices that are trading with cuts of about 1.4% at this juncture, and we're barely 1 hour into trade. It's 17,266 as I see it. In fact, it's 1.5% at this point, and the selling is pretty much broad-based. The only sector that is currently standing in the green is the defensive sector, which is pharmaceuticals, and that is evident in the heat map of the Nifty 50 as well. You have Cipla, Dr. Reddy's Laboratories, Sun Pharmaceuticals, and Divi's Laboratories that are the only stocks on the Nifty 50 that are trading currently in the green. The rest of the Nifty 50 is trading with cuts. The worst affected, Tata Motors down about 4% or so. ONGC, one of the gainers over the course of the past week, losing about 3.9% today. Bajaj Finserv, Bajaj Finance, both losing over 3% each. And then you have the likes of Kotak Mahindra Bank, JSW Steel, Maruti Suzuki, Hindalco, and the list goes on. Reliance Industries, which was the top gainer in trade yesterday and provided quite a bit of support to the benchmark indices, is losing about 1.8% at this point at 2,447. It went past the 2,400 mark in trade yesterday. Now, I was talking about the sectors, and there are quite a few that are now seeing quite severe cuts. In fact, the media index, which was one of the outperformers over the course of last week, is now down about 3.5%. Realty is down about 3.5% as well. Auto as a pack has been underperforming in the recent past. It's down about 2.4%. And then banks have been hit quite badly in trade today, down about 2%, the Nifty Bank, and that's something to watch out for. The context here is that foreign institutional investors have been selling at a frenetic pace. Just in yesterday's session, you had foreign institutional investors sell about 2,300 crore rupees of equity on a net basis, and that takes the cumulative total for the month so far to 25,338 crore rupees on a net basis. If you look at the last 5 trading sessions alone, they've sold about 17,000 crore rupees of equity on a net basis, and that is not really matched by buying by domestic institutions. That is to say that they are buying. They have so far this month bought about 18,300 crore rupees on a net basis, but the selling is more substantial. And in the past, I do not know if you can draw a direct corollary, but in the past, when there has been substantial foreign institutional investor selling, private banks have gotten affected quite a bit. And in fact, they were the worst performers over the course of the last series, which, as you know, culminated in yesterday's session, in which we managed to end in the green. Of course, what is the next trigger to look forward to? It's a little hard to say, because you're just done with the earnings season, and there are a few other things that you will want to watch out for. It's going to be elections soon in a few states, and that's certainly something to watch out for. Whether there's any legislations, of course, that's going to happen over the course of the winter session, and those things are likely to affect the way that the indices move. But right now, it seems like we have been caught in quite a bit of selling by foreign institutions, and there is quite a bit of pressure that is building right now. In fact, the Nifty 50 has gone further. It's down about 1.7% at this juncture. We'll keep you posted about what happens.